Welcome to Core Finance, where I'm joined by Dr. George Morris, who is COO at Valirix. How are you today, George?
Good morning. Good to speak to you, Zach.
Right, big news in the market today that you released at the crack of dawn, but you can just run through what Valirix does and how we've got here.
Valirix was established back in 2006 with a reversal into an AIM-listed shell to exploit various cancer therapeutic technologies and diagnostics which are now either sold on to other companies in the form of the diagnostics, but in the therapeutic region is now what we designate Val 101. It's a long-term project which will come good in time. However, since then we have developed two further products. One, Val 201, which is the subject of this morning's announcement, and I will go into in more detail shortly, and the other is Val 401, which is a repurposed drug that completed successfully an early to mid phase 2 study in lung cancer and is now in talks for partnership for its phase 3 and commercialization.
Right, I mean, you're doing very difficult things. Lung cancer is notorious for being one of the most difficult cancers to cure. And it's been a long-term journey, let's say. It's been a 10-year journey as well. The AIM market's notoriously fickle, impatient, and generally grumpy if things take more than like 3 months. What's the experience been so far?
Over the near decade that we've been doing this, actually slightly over a decade, on the whole it's been very good and very supportive. We've had 2 minor exits with the diagnostic stuff, which has funded and helped development in the therapeutic area which we focus on. However, obviously, with the demands of capital that cancer research requires and the length of time, as you allude, 10 years, it's not the case in 401. We've had 401 since 2013 under our purview, 2014 when we started developing it seriously, and we've spent precious little money on it. However, it is a long-term project, and we are never going to be a drug seller. We will be selling to those who are drug sellers. So
there's 2 strings to your bow, the diagnostics area and the therapies for cancer.
Yes.
So those are the 2 drivers.
Those were the original drivers. We have, on the whole, removed the diagnostics from our portfolio and handed them on to others at significant uplifts in value. For many reasons. It's difficult to run a long-term therapeutic program alongside a diagnostic platform which other people will also be using. There becomes a conflict of interest between your own development and that of your clients, right, and therefore we separate them.
Okay, and the other obvious question I think to ask is, you know, Glaxo, AstraZeneca, you've got these multi-billion-pound companies all over the world trying to find the cure for cancer and all the other related things that they're looking for. Isn't it a big companies, big capital game that you're in? And what's your edge compared to them?
No, I don't think it is a big person's game in that sense at all. The big persons are superb at marketing, sales, and all such distributional activities. R&D, they are notoriously bad at. There are many examples I could give, and it would be unfair to focus on any, except that there was a large research organisation set up by ICI originally, which became Zeneca up in Cheshire, which had such a low throughput of drugs and output when it became AstraZeneca eventually that it has been shut down and sold on to various small companies. In the few years it's been there, it's more than doubled its output. So it's a small person, high-risk game. You can't afford a team of 40 to do a product like ours. We do what AstraZeneca or Glaxo or Novartis would do with 30 or 40 people with 4. It is a completely different scale of activity.
So you do all the heavy lifting so that they don't have to?
They can't do it in the speed or the time which we can. Yes, sure. It's 5 to 10 years to get a product there, but for them it's 15 to 20 years.
And the end game of all of this is that you develop the magic bullet or the silver bullet, or you come up with the cure, and then one of the big players will then take you over, or you'd sell on to one of the big players?
We will license through JV or sell through, it's a whole spectrum of activities you would do. It really depends which of those particular points we take. On the whole, a clear sail through of a product is the easiest for us because we're a small team. We cannot do things that require 50 people, obviously, and there are, in the later stage and marketing ends of it, way more experience than we have and way more capacity than we could possibly command.
Right, so just run us through today's announcement there.
Well, Val 201, which we had approval back in 2014 to trial originally, we have now run through a phase 1, phase 2A study, and we have shown the primary endpoints of safety and tolerability. Safety is that we don't hurt people more than an acceptable amount. In fact, we don't at any of the therapeutic doses we want. We've also, with tolerability, shown that we can get to a therapeutic level without causing great harm in an acute way, and we are still following up on the chronic exposure to the product. And third point as an endpoint in this trial was to see what effects, if any, the compound had in humans after a very, very complete and successful preclinical development program. And I'm absolutely delighted to say that the key markers of reduced testosterone and reduced PSA are showing to be positively correlated to the dose we give patients. In other words, we are making their cancer better, as far as we can tell, with the early stage trial we've seen. But it is absolutely fantastic news and is, in my eyes, as good as we saw preclinically. And being an independent review, I'm very, very happy indeed today.
Right, and what's the best case scenario in terms of how this could pan out over the next, I don't know, year or two? What are you looking at?
We will be completing this study. It's slated for June. We have patients on the study now. We obviously have to correlate their final data. We then have to do a regulatory submission and a follow-through, and we will come up with a late stage, what we call pivotal trial, where we will gain sufficient information to make a market application, which will take 2 to 3 years to come through. They always do. It's basically the system. And at that stage, once we have got the roadmap sorted out, we will be selling it through or joint venturing that, as we are currently doing with 401.
Right, and I've asked you for the best case scenario. What are the headwinds? I mean, what is it? Delay, or it just finds it doesn't work, or what would you say?
Obviously, there's always the case that it may not work in the future. We're past the point where it doesn't work.
Yeah.
It works. It's just how sufficiently it works. And now things like cost of goods come into play, rate of dosing, how often we actually physically need to do it, and the late study will be to assess those points and make it patient-ready, I think is the phrase I would use.
Okay, well, congratulations on today's news. Dr. George Morris, CEO at Valirix. Thank you very much indeed.
Thank you very much indeed.